Damn, you got the silver short, man. Can you hear me?
All right, let's get right into what we got going on. We can take a look at silver first, because I just got short here. So now this is a very high risk trade, because when you're trying to pick the top on an asset, it's very, very, very difficult. But typically, like when I launched a product called Fous Forex 3, which was shorting mastery. This was like in 2015, 2014. And a lot of the premise of that strategy was called the over-under strategy. And it was essentially getting short over a psychological whole number, but typically price would run between 15 to 30% over that whole number, and then that would be the top and then pop back. So in the case of like $100, this is a very, very significant psychological number. But the over-under strategy would suggest that at that whole number, you would probably see sometimes an extension, an exhaustion of stops being placed, maybe 20% over. And in this case, that would be silver pumping up to 115 to 130. And basically, essentially, over 130 would be your stop max limit. And the target here would be back down towards $100. So this is a theory and strategy that I saw time and time again in the stock market on parabolic moves for 10 plus years. And then I built a strategy around it. So we might be seeing something similar there here on silver. And on top of that, we saw that huge candle where everyone saw exhaustion. And now we're seeing the retest and trap over that. So this could potentially be the bull trap where everyone who got short here, there's a bunch of people who sold, a bunch of people who took profits, a bunch of people who got short on that spike into here. And now all those people who got short here are now doing what? They all probably got short and they all placed their stops above highs. They're like, all right, I'm short, but I will be stopping out if these highs are sweet, which now we have a bunch of liquidity here where we can take advantage of those people who are getting stopped out. My premise for basically all of my trading strategy is looking where are people going to get stopped out and then how do we turn that into a trading opportunity for us. So I was monitoring this after that day. I was like, okay, maybe that could be the day where there is that first uh, kink in the armor. This is basically a crack in the bridge where you start seeing signs that, okay, maybe this is actually some weakness coming in after the momentum was just kind of steadily up here, right? Run, bull flag, run, small flag. Now this is like an exhaustion here where it's getting exhausted. We've gone on a parabolic run. We hit the major psychological number. And now we can look at this as a potential over under strategy. And by way trading it of where are people going to get stopped out? They're going to get stopped out over the ATH, where people all got short here, thought, okay, maybe this is the top. Let's all start shorting here. Now, all these people are getting stopped out above ATH. And now that turns into trading opportunity for us. And profit target will be this daily demand zone, where $100 is going to act as support, but there's probably going to be an exhaustion and a panic of selling once it cracks under $100 right into the demand zone here as well. So that would be the theory of this trade. Obviously, it could 100% be wrong. I'm putting stops at about 126.50-ish, giving it a lot of breathing room. You always have to have a lot of breathing room. The tighter your stop you're trying to make, of which if you do have a tight stop and you're going for a sniper entry, right, this turns into a massive, massive profitably trade, right? It goes from risking, let's say, $1,000 here, of which if it came down here, you would make $11,400, which is a huge ROI. But you're very likely to get stopped out and actually not even make any money on the trade and actually take a loss. So I prefer wider stops. This risking $1,000, you would make 3,500. So you're going to make significantly less, but your win rate's going to increase, and you're going to increase the probability of you actually making money and also reduce stress. Because if you're taking a bunch of losses all the time, it's extremely difficult to have the mental fortitude to come back again and try again if your account's just bleeding down. So in this case, I still think that we could potentially push into 120 um, plus and still go into this range. I'm not convinced here that we're just going to completely dump right after this. Which is why I want to give it some room to have some more stops taken out and me be able to have the ability to have breathing room on this. Another reason why I'm potentially looking at this as a short is because obviously the US dollar has a high correlation with gold and silver. The US dollar just got dumped on, but it is creating a a solid divergence here. Right. So new lows, low here, new lows here, but lows here, not new lows here. So we're creating quite a heavy bullish divergence here, right? Degenerate shift is not making new lows, but price is making massive new lows. So this US dollar dump, also retesting the descending channel zone, is looking like an area where this could be a nice bounce here, and that would obviously also have the correlation of inverse effect towards gold. So a really big inverse move here on the dollar dump, also retesting the low of this channel. So if we do bounce off of here, and we're also extremely oversold here, which is also bullish divergence, bullish divergence. We do see a bounce in the US dollar here. That'll obviously have a high impact on gold and silver, pulling back to the downside. Again, this is just a probability of a trade. It doesn't mean that it's going to happen, but that's all we're doing as traders is looking for, okay, what are the high probability setups that we can look at and how do we take advantage of it with stops in place so we manage the risk. So that is the trade on silver that I just mentioned in the trade alerts group. If we look at Bitcoin here, let's just take a look at where we are at on BTC. Right now, BTC is essentially working out to the T after we saw this bull trap, of which we anticipated when price was back down here. I said, guys, I think the opportunity here is to wait and see if we break out above this high, which was kind of a mini revival pattern. And then if we close back below those lows underneath here, that would be the confirmed bull trap for us to get short and then watch the cascade and then potentially get a break of structure and just continue this bearish market structure that we have going on here. And obviously that would potentially be a buying opportunity just under here because we do have daily demand right under here. So where is everybody going to be in max pain? They're going to be in max pain because everyone has stops below these lows. All right. So that would turn into a potential buying opportunity in this daily demand because all retail who's been buying this dip, they're all putting their stops underneath this low. And so that also turns in the opportunity where there's going to be a bunch of liquidity in there. If we are short, we can expect that there's going to be a lot of selling and stops taken out, of which we can then take our profits in that zone and simultaneously potentially be getting long at the same time. But that all is in the case if we actually get down to there. There's a lot of support here. Like there's a level here, level here, level here, level here. All that has to break down in order for that to come into fruition. So we don't really know what's going to happen yet. We could just trade fucking in sideways chop for fucking months. I have no idea. So we don't know what's exactly going to happen. But if we look at the weekly chart, this is a clear shift in bullish trend to bearish trend. We're now down below the 50-day moving average on the weekly chart. There has never been a 50-day moving average weekly breakdown without going into a full bear market. Not once in history has it not happened. So we have 100% probability it's going to happen again as of right now. Is this going to be different? All of a sudden, are we going to pump to the upside, go back above, and we don't have that? That's a probability as well, which would then shift this from 100% probability. And then in the future, it would be like, okay, we now have an 85% probability this will happen, or 90% probability breakdown here would lead to a full-blown bear market. So right now, bias is still 100% bearish on Bitcoin. This is basically a bearish flag within the first pullback of BTC. So ideally, we don't break above these weekly highs at about 95.30, which is basically the highs right here. because we got short right about here. I was definitely late to the party. Like this dump from here all the way down to here, that happened within like minutes, probably about an hour and a half before I actually woke up. So that move for me wasn't able to get in, and I didn't want to have a trade set there as a set and forget trade because I didn't want to get filled down here short and then wake up and it wasn't the closure of the market yet. And then it was actually just a wick out and then we continue up. So I needed to wait for a confirmed closed before I actually uh, entered in that position. But as of right now, still short. I added that small position, so I have about a little over 2% now, averaging in about right here, I believe. And I will have my stops placed right now. I'm currently at break even. I also took 20% profit right down here. As we swept those lows because we added right here, I wanted to lock in some gains. So 20% position was exited for a profit there, just in case this is actually the low and we potentially even come back up here and at least lock in some profit on this trade. So ideal situation is we just flag here and we continue to break down lows and we eventually get breaking down below these lows and go right in daily demand. And maybe we pick up some longs in that for a whiplash trade back into another sucker punch supply and maybe even lower after that. So that is currently the setup on BTC on our short. Let's take a look at Ethereum. Similar situation on Ethereum. Mind you, I still have all my dip buy order plans to be buying Ethereum down in this zone, which I believe that's still on the QCR. But right now to short Bitcoin. Take a look at others. Same thing. Everyone got trapped here. Everyone was hoping for the fucking moon, but we're in a bear market on BTC. So all altcoin buyers got absolutely destroyed. US 100, NASDAQ retesting ATH. I mean, it's still looking quite bullish. So stocks have still been able to sustain quite a bullish pattern. This is a force pattern in the making. But Bitcoin is not interested. Crypto is not interested. The charts have shifted and it's still in a full-blown bear market. S&P 500 trapping a little bit here. We also have a bearish divergence. Typically, when you see highs and you want to see good momentum, you would want to see an RSI indicator making new highs as well over here. But right now we're seeing here high, newer high, but not a newer high on RSI, which means that rally is weakening. So this is a bearish divergence on S&P. So hard to say what's going to happen there, but we'll see. Gold, 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 gold. Gold looks like it could be exhausting here, right? That's the beginning of a reversal candle. Still quite a bit of time before the market close. So we'll see how that goes. Obviously, I'm short silver at the moment. Right now, it is looking good. But we'll see. There's still a lot of time. This could just be a bullish flag before another spike up, of which I still expect 120 to be hit. I'm not I'm expecting 120 plus to be hit, which is why I want to have some breathing room for more people to get stopped out. People who are short now, who start getting short now, they'll place their stops just above this high. So I'm expecting more stops to be taken out, more liquidity to be there. Boom. And hopefully I can survive up to 126.50 before we actually see a reversal back down to around 100 to 90. Altcoins, not really looking at much here. I mean, Solana, this could be, there's a lot of people stops just under here, demand right underneath. So this could also be a short. A lot of people are scared right now because they're hoping that these lows aren't cracked. But what do I look for? I look for a recent low to be taken out into a demand zone of which we can either take profits or buy into it. And that's exactly what we have here on Solana. So Solana is looking like a potential dump below those lows into demand. XRP, a bunch of people have their stops under here, so I'm expecting price to dump under here. Unfortunately, this candle really fucks up all demand zones to look at, okay, where would I want to buy the dip on XRP? Because there is no demand zone. It's just one massive liquidity sweep that really just kills price action analysis. But overall, yeah, altcoins have just been fucking cooked. I think the era of hodling altcoins is over. There's definitely going to still be a lot of trading opportunities in altcoins, but the reality is they're all worthless. Nobody uses them for anything. Nobody uses Ethereum for anything other than to fucking send people USDT. Crypto is essentially worthless at the end of the day. It's been 15, 20 years since it was created. I don't know how many years, but still nobody uses it for anything other than to try to get rich. There's zero use case in the world, still. So we'll see how that goes. But yeah, all these coins are fucking worthless. But we can still trade the patterns. Um, but anyways, guys, that's top-down analysis. So we can move into Q&A. I know Sean had a question about getting punked on the US dollar in the Japanese yen trade. Where did he ask it? Uh, I think he said it somewhere else, but he was asking about, is there any way to anticipate the Japanese intervention news for that? I'm not a forex expert, and also I think it's just a news event that came out. News events can totally shift chart analysis rapidly, and so you can't anticipate news. And sometimes news just comes in and slaps you in the face, and there's nothing you can really do about it. This question here, when you define supply and demand in execution zones, what is your minimum acceptable risk reward to consider the standard RR for a valid setup? For example, do you anchor around 2 to 1, 3 to 1, or does it vary of context? Typically for me, it's 2 to 1 minimum. If it's a 1 to 1 trade, I would never take it. Uh, so minimum 2 to 1, but typically the way, since my stops are usually pretty wide, it's usually like 2 to 1. The max I can usually get is like maybe 3 to 1, but I'm never like a 10 to 1 R trader because the sniper position there uh, typically just leads to me getting stopped out and I just take a bunch of L's. Are there specific conditions under which you intentionally violate your minimum risk reward rules, or is that an absolute constraint in your process? Yeah, it's basically 2 to 1 or nothing. So yeah. What characteristics separate an exceptional supply and demand zone from a merely valid one? Concrete examples of what elevates supply zones would probably be helpful. So typically when it comes to supply and demand, the larger the exit candle out of that demand zone, uh, the better. So if you see a massive, powerful candle, of which like this candle here, we have areas of balance and then a massive candle. That's quite a strong bullish engulfing candle. So you have a bullish engulfing and a huge body candle. So that demand zone would be valid, especially when it's considered that a low is being swept into demand. So you always want to see a recent low swept into a demand zone to consider a potential buying opportunity. Also, you want to consider like bullish market structure versus bearish market structure. So typically in bearish market structure, lows are going to be swept. Okay. So if you're looking at like a dip buying opportunity, but we're in bearish market structure, and let's say there was like some nice balanced candles here, and then the first candle after this bounce here, but we're in bearish market structure was a huge big candle. And you're like, oh, nice, a demand zone for me to buy into when it dips back in. But let's say we've been in bearish market structure, or we actually flipped recently. So we're now change of character into bearish market structure. And you're thinking, oh, I'm going to buy into this huge, nice looking demand here, but we're in bearish market structure. That's not a valid area to be buying into demand because the probability here is suggesting that we're in bearish market structure, which means the probability of this low being taken out is much higher. So you don't want to be buying into a demand zone after a recent low is made if we're still in bearish market structure. You would want to be waiting for price to break out above into bullish market structure. And then maybe that candle back here is now a valid area to be buying. And then you'd buy into that dip down here to go even higher. So that is basically how you'd want to look at demand, because you don't want to be looking at a demand zone as a buy zone if you're in bearish market structure, unless it's a low being swept, right? In bearish market structure, you never want to buy the dip unless it's a low being swept, because you want to be buying into the bearish market structure breakdown, all the stops being taken out who are buying that first initial dip here, right? All these people who bought this dip now have their stops underneath here. Okay. And then you can trade the whiplash after those stops are taken out back into the supply, take your profit, and then maybe even short for the next one. So that's the answer to that question. What are the earliest objective signals that tell you supply and demand is going to mean revert as expected? If price hasn't hit your stop, are there conditions? I honestly don't even know what mean revert means, so I can't answer that question. But anyways, guys, if you guys have any other questions here for you guys on the live call, I am open to answer anything. I guess that my question for you guys is how are you feeling about trading this market right now? I know bearish market can create a lot of confusion. That's why I call it the whiplash and sucker punch phase, because it whiplashes everybody. Your fucking neck snaps, and then you're buying the dip, and then you get sucker punched because a lot of people are trying to buy the dip that keeps on dipping. And it's hard to switch from, okay, we're going up, everything's looking good, we're buying longs, things are pumping, and then all of a sudden everything flips on you. Completely change your mindset, completely change your strategy, and shift gears in an instant, which is not an easy thing to do. So curious from your guys' standpoint, because I'm making money, but I feel like the community has gone completely quiet. And I get it. A lot of people probably got cooked, especially in this. I would imagine this candle right there, the largest liquidation event in crypto history, I would imagine that wiped out probably 50% of retail traders on exchange platforms. So I think exchanges got absolutely smoked on this as well, because so many people were looking at this as, okay, ATH, let's go, 200K, Q4, Trump's in office, everything's going. Boom, everyone got fucking cooked because so many people were leveraged long and they all got wiped out. And thank fucking God I got short and made a $250,000 right there. Curious to hear from your guys' perspective.
Yes.
Yeah.
Okay.
Okay, sorry, I can hear you guys now.
Oh, okay.
All right.
Our lips were just moving, but no sound. No. I think
Chris, go ahead, and then I'll go after.
Oh, okay. So I joined this group I think like 3 or 4 months ago. I really haven't like I've done a lot of the videos. I mainly trade the futures markets though, and I'm trying to like kind of transition into the crypto and so I can be involved with what you guys are doing. I just don't know a lot about like what platforms to use and like how like for a I guess the question is for somebody just starting off in this kind of market, like where should we start? Like where would you start? You know, because I mainly trade just futures, you know.
Yeah.
So when you guys are all like posting like your earnings and talking about this stuff, like I want to be involved. Like I don't even know if there's like a sim that I can get started on to trade cryptos, you know. But I know it's kind of like there's like the discrepancy in America that you can't really like trade a lot of this stuff.
Yeah.
So I don't really know how people do it here. I don't know if there's anybody else that has advice on how to get started on this.
Yeah, I mean, you can trade on crypto exchanges like Blofin, but other than that, you can use prop firms So, I mean, Hydra, we just launched a fully dedicated crypto trading platform. We got 120 plus. We have 120 pairs on there. But
Right.
the benefit for a trader is that if you look at anything in life, your probability of success is very low. You start a business, 95% chance you're going to fail. You try to go join the NBA, you probably have like a 99.9% you're going to fail. Trading, similar, 90 to 95% chance you're going to fail. But for those 5 to 10% who are actually profitable, prop allows you to get access to a lot of capital to actually use to your advantage without having to risk your whole bag. So prop can definitely be beneficial for the people who are actually profitable. And it's also beneficial people for people who are going to lose rather than depositing 10K on Blofin, of which you just, let's say you only had 10K in your bank to trade with. You deposit all that on Blofin, you're risking that all. And your probability of losing it all is like 95%. So at least with prop, yeah, you're probably going to blow up a few accounts, which is going to make that prop firm some money. But at least you're not risking everything because you can get access to 100K in capital for $1,000. So you'd only be risking 10% of your total bag. So there's benefits to prop. And yeah, to be honest, I own a prop firm. We make money off of people losing trading. That's it. That's just how the system works. But it's beneficial for the people who actually do become profitable. And it's also beneficial for people who are just learning to try to want to test and actually feel what it feels like to trade when there is some risk on the line. Because you can paper trade in which I think is good because you can actually you get the feel for how markets move. But once you go from paper trading to having something on the line where you could actually lose an investment, whether it be you invested a small amount with a prop firm or invested your entire bag on an actual broker like Blofin, the game totally changes. At the end of the day, understanding price action is just like who fucking cares what you understand?
Yeah.
Like that is easy to learn price action. What's hard is mastering your mind to be able to have the discipline to make the decisions at the right time in the right moment when shit gets hot. So for you to where to get started, you need to do Hydra. There's FTMO. I didn't get to use
I mean,
it.
I was doing good with Apex Trader funding.
Yeah.
I had 10 funded accounts. I did like 120,000 in withdrawals in 2024,
Yeah.
but Apex like pretty much blocked me out the system. So now when I try to go and like purchase an eval account, they don't let me. So I kind of have that fear now, like going into these prop firms, like, when you do good and you are profitable, is it kind of like Vegas where they're like, oh, this guy is part of the 5%. Let's figure out a way to get him out of here.
I mean, there's definitely, think of it like an insurance company. An
Yeah,
insurance company gives people all this coverage, but just like, hey, this was the policy, you signed the deal, and no, we're not giving you coverage because that wasn't part of the deal when you signed up for this. The payouts then come out of the revenue stream um, to be able to do that. Where the reason why prop firms go out of business is because they start going out and buy themselves Lambos, live extravagant lives, and fucking don't keep reserves. Like Hydra, we've never missed a payout. We're almost 4 years in business because we're extremely conservative because my reputation's on the line and I can't fucking risk going under for any sort of dumb reason. So
yeah, and I noticed that like when I trade with prop firms, it's like it's a little easier for me because it's not my own capital. So like
yeah,
when I traded with Apex, like I knew the rules that I had to follow. So every time I went into a trade, I would plan them, I would do everything correct. And um, if I won, I won. If I lost, I would evaluate why I lost. But once I put money into like my actual money into an account, it's like a whole different ball game for me, like emotionally, because it's like my money.
yeah.
So trade, I get a lot more emotional knowing that it's my money. I don't know if anybody else has that problem. I've read a lot of trading books of I think I posted one of the books in the chat the other day. It was the Wizards. What was that book called?
Market.
Anyways, yeah, Market Wizards, where
Yeah.
a lot of those traders said that they traded better with other people's capital.
Yeah.
Um, and so I don't know if that's something that you've ever had to struggle with. I don't know if you trade with other people's money or your own capital or.
No, I've had a lot of offers to manage money before, and I'm just like
Yeah,
it's different if your prop is different because you don't have
the
literally
pressure of
people's
people.
money. Yeah, yeah. Like I've had like family members. Like my one of my first big years, I was trading at a prop firm. This was before, uh, not a funded trading prop firm, but this is like a proprietary trading prop firm. I forget what it was called, something Capital in New York. Uh, it had a blowout year in 2009, and they asked me if I wanted to manage capital at the firm, and I was like, no, that's way too much fucking pressure. Like it's already stressful enough with my own money. But to add like the firm's capital, which was real capital, this wasn't like, okay, we're going to give you virtual capital because prop firms don't give you any money. There's
Right.
live trading going on in prop. It's all demo at the end of the
Yeah.
day, but you still have money on the line that you risk because you are going to get virtual capital payout, like real money. So, but if any prop firm says that they're taking the trades live, it's all bullshit. It's all a virtual demo environment. And then if you make money, then it's a real payout for those profits.
With hydro trading, are you allowed to hold positions overnight?
Yeah, yeah. There's
Oh,
you can swing, like because I only swing, and also Justin, who runs FPFX. I don't know if you've watched his interview. You should definitely watch his interview on Titans of Tomorrow. Asks them if there's data behind who's making money on prop firms. And Justin manages about 150 prop firms. He owns FPFX, he's our tech provider. He asks them who's making money on prop based on the tens of thousands of traders that you see underneath, and you'll see what he says.
Those people that you've seen that do beat the odds and are there for a little bit longer, or the people that do make the funded points altogether, what kind of strategies or behaviors do you see in them on maybe so traders can kind of see, okay, the people that are scalping, they're actually struggling, or the swing traders are struggling, or is there any kind of help in there from the data?
Yeah, and what indicates typically a consistently profitable prop trader is the same thing that's indicative of a consistently profitable self-funded trader. It tends to be someone who is not over leveraging their account, that is not over trading the account. People that take a position, typically more of a swing trading style, because inevitably, if you're a short-term trader, you're just going to end up chopping yourself up. You're going to end up having spread costs and commission costs that will really eat into your account. Whereas if you have the patience to hold a position for a day, 3 days, and just happen to be good at picking overall market direction, those tend to be the best performing traders. They don't set the world on fire. They're not having crazy returns, 10, 20, 50% a month. They're the guys that make 3% a month and 4% a month, but they do it time and time again. The largest payouts that prop firms typically experience are from traders that are really just swinging for the fences. They are over leveraging the account. They got lucky on a position, and that resulted in a very large payout.
Mm-hmm.
So basically, what we see also is which day traders are good for business because they burn counts and they buy again. But profitability wise, by the data, it's typically conservative trading who are swing trading and consistently surviving over the long term and being able to have smaller returns. But that's difficult because swing trading is fucking boring because you're just sitting and waiting weeks for an opportunity to come. You take the opportunity, then you may take a week or two for it to come into fruition. Then you might have to wait weeks again for the next opportunity to set up, and weeks again for it to come into fruition in TP, or you get stopped out, or you just miss the trade in general, and then you just waited a month for that setup to come. You miss it, and now you're waiting another month for the next setup to come. So swing trading takes a lot of discipline in the way of patience. But from my standpoint on like the current market conditions, I mean, we made one trade right here. I think we might have missed this short. And then I made one trade right here, one trade right here, and then one trade right here. So that's like 4 trades since October, but they've essentially all been winners. And so it's been boring as fuck, which is why I think why the community has kind of died down, because I'm not here every morning like, all right, let's scalp this fucking morning candle here. What's the daily bias? What's the fucking IFFG, fair value gap, SMC bullshit? Because I'm not burning up capital. I'm slowly grinding and building, because when the bull market does come back, which it always will, my confidence will be high, my account capital will be high to crush the next run. Instead of, I've been in this situation plenty of times where you get fucking chopped up. Like this fucking move right here, I got fucking cooked. Not in the, this is, I believe this whole thing right here was when I got fucking smoked on UST when Anchor went under. I was sitting on the sidelines, patient, waiting for the bull market. And then I lost $2 million. Mindset was completely fucked. And I missed a lot of this move.
Oh, cow.
And that wasn't even a trade. It was me trying to be smart on the sidelines. But my mindset was definitely got damaged by that. So in bear markets, it's important to be conservative and calculated. I mean, I guess this has nothing to do with your question. You were just asking if you could hold overnight.
Yeah.
Off on a tangent there, but yes, you can hold overnight on Hydra.
Okay.
Depends on what your account is. I think you have to, of which in fact, we actually just launched our new website just last night. So, and we also have instant funding where you can get access to capital without going through the phases. It's significantly more expensive though. Like instant funding forex is $4,500. Crypto instant funding is $2,200. Futures, I guess we don't have instant funding for futures, but we have forex CFD, of which, in my opinion, it might be a better option if you're also trading other assets, because you can still trade Bitcoin, Ethereum, the 2 major assets, which I'm mostly trading right now. And you can trade gold, you can trade forex pairs as well. And a 2-phase challenge here is $1,500, or yeah, or what's the 1 phase? 200K, 1,500 also. In all these platforms. So that's if you want to go Hydra. You can pick whatever prop firm you want, but prop definitely has its benefits as long as it's accessible to you as an American.
Okay.
And then, of course, go through the course, understand the system of exactly why I'm doing what I'm doing would be the most beneficial thing.
Yeah, I've done like half of it already. But I wasn't able to like trade any of this stuff because I don't think the crypto was available for whoever lived in the United States when I signed up. So I guess it is now, right?
Yeah.
Okay. Yeah, it wasn't available. So then I just kind of like I had bought one challenge, I failed it. And then I just kind of like stepped back, and I haven't really been like taking a part of like the chats or anything lately. I've just been like trading futures, but I spent a lot of money to be in this group, so I definitely want to get like back in it, involved, and learn from everybody. You know, because this isn't something where I want to get rich overnight. Like my goal is to learn this so I can have, you know, so I can have the skills to make money in the future. You know,
Yeah.
If we even can make money in the future off of this once robots take over, but
Yeah.
robots are trading
Definitely be every time you come into these kind of moments of pullbacks in the markets, it feels like it's never coming back, feels like, oh, that's going on. And then all of a sudden, like the funny thing is like that I see in my business, because I obviously have the trading business side of revenue as well. It performs exactly like a retail trader trades. If I post that I just made a bunch of money and do a big YouTube thing about it and Instagram, that means we already just peaked. Like that move's over. And then when everybody wants to join,
yeah,
I'm like right now is when to join, when things are down, so you can actually take advantage of the next move that comes up. But that's just That's not how human psychology works. They don't care. They want to hear about the big thing that just happened. But especially from a swing trader, like I waited for that move for months, then I got it. However many weeks I held it, then I sold it. That entire move is over. Then I'd make a YouTube video about it. And then now the FOMO is high, and then people join and they come in. They're like, "Wait, where's the next big one? Why am I here? You're not doing anything." Like, yeah, you missed it. Like that was
Right.
that move. But now you need to learn why I did that and how I did that for the next one. That's kind of why I try to get away from the Wolfpack Trade Alerts group. It's just too emotional with people expecting too much. And it also forced me to overtrade because people would cancel if I'm not fucking in here every day fucking trying to find an opportunity for them when there's just nothing there. So I'm making up trades for no fucking reason other than to please the business and please revenue numbers, which was fucking exhausting and didn't help my trading performance either. And it didn't help the people's performance either because I'm there looking for a trade opportunity just for the sake of revenue numbers instead of actual disciplined trading.
Makes sense. Well, thanks for all those things. Appreciate it.
Yeah. Any other questions, guys?
So earlier you were asking about like the group and how we're doing and stuff like that. So I just thought I'd share that these past like 3 months of that. Well, for me, you know how you just said you've only made like 3 trades or something like that or four. I've actually been playing it very much the same, but just a lot more like scalping, and it's gone like pretty well for me. The only problem is most of those gains were like making back like a big loss from October 10th, which kind of sucked.
Yeah.
But you know, it was a black swan event and shit happens. But now I'm just trying to like, just keep that going, take your advice as much as possible. Cause like in my head I was like, bro, if I would have just fucking followed Cam on that October 10th, like none of this shit would have fucking happened.
Yeah.
But yeah, shit happens, and these past 3 months have been like really good for me, and I'm just trying to keep that up as much as I possibly can. And yeah, your guidance has been pretty good, so shout out to you.
Yeah. Thanks, man.
Oh, one more question. Because you know how I said I've mostly been doing scalps. It's because I don't trust anything. Like everything is just like, you just said it, we're just like in the chop zone. So, and especially since you're like sure and you think a big move is coming down, like I'm not really trying to be on the long side either. So what do you think is the best play? Just keep what we're doing right now, just being semi-patient and just, not being too fucking optimistic.
Yeah, I mean, for me, we're still in full bear mode. So I'm not buying any dip to hodl or for a long-term position. There's no revivals yet on altcoins. BTC again on the weekly chart is full-blown bear. Weekly breakdown. Similar thing happened here, right? This was my whole premise for that move here was like, this is exactly what happened last time. Had a mini revival here, faked everyone out, and then just complete dumpage. Same exact thing. And that was after a 50-day moving average breakdown after a major run after a secondary spike. So major run, secondary spike, 50-day moving average breakdown, fake out revival. Now looking for this to have a potential just continuation down. And so there's no indication to me that this is over. And of course, the apex is the ultimate dip buying strategy on Bitcoin. And that's when fear and greed gets into monthly zone, which again, I missed this one because the money that I was going to buy that dip with, I was holding fucking UST and I fucking lost $2 million. So that really here for this huge fucking pump. So hopefully if we get another apex, that's going to turn into a big trading opportunity. But
wouldn't that just put altcoins at basically zero?
Negative 90%-ish, yeah.
Shit. All right. Interesting. Okay.
Yeah. I mean, for Ethereum, I think we could easily come down into this demand zone here. I don't know. It's a probability I want to be prepared for. If it happens, it's all about preparation. It's not about predicting. if these things do happen, of which there is a probability of it happening, how is that going to affect me? And am I prepared for it if it happens? I'm not here to make any predictions. It's just if that happens, can I turn it into a trading opportunity? Or is it going to completely wipe me out and fuck me over? I would rather approach it as if it happens, can I make money off it? Can I turn it into an opportunity as opposed to I'm going to make a bet that it doesn't happen, but if it does, I lose everything, completely fucked. That's just the way I look at it. I have no idea if any of this is going to happen. It's just about preparing for if it does, can I turn it into an opportunity? Or if it does happen, I know that's going to be a big opportunity, and I want to be there to capture that.
Sure.
Hey Cam, I got a question
Yeah.
for you.
No,
Go
go ahead.
ahead.
I was done.
Oh, my fault. My fault, sorry.
No, I was done. Go ahead.
Cam, so I'm studying the course and it's been going really well because I go over and over and over it, and I'm seeing the charts much better now than I did before. But my only question is, when we're looking at that what I printed it out. I have it on my wall, like the Armageddon, the revival, the force
Yeah.
pattern, like like it's really good. Where are we looking on the daily more, or on the weekly, or on the monthly for that? Because I know it's not going to be perfect for all the alts that, and I've been trading some good alts recently. I've been doing really well, but and I'm trying to incorporate that on like some whiplashes and stuff like that. Um, but like when I'm analyzing that, because I know we have to go through all of them, like what do you focus more on, the daily or the weekly, to kind of see where we are? Like if it's gonna show like a potential force pattern or whatnot.
Typically, mostly the daily chart for the patterns that you're going to be looking at in the quantum cipher, patterns that we're actually trading. But then there's definitely some macro patterns that we look at, which are a more scale, like the apex, which you only see on the monthly chart here. Like you can see every time we've gone into apex on Bitcoin, apex, apex, apex. We're going to hit an apex again, potentially. Those have been the biggest dip buying trading opportunities in Bitcoin. And the apex every single time has come after a mega run and then a 50-day moving average breakdown on the weekly. So weekly chart breakdown on the 50-day moving average led into an apex here after a major run. Major run, 50-day moving average led into an apex here. 50-day moving average after a weekly run may turn into an apex somewhere around here. So that would be kind of like the longer term outlook view. But as far as like looking at the 9-step market cycle framework, I typically look at that on the daily chart.
On the daily, got it.
Yeah.
Got it.
And
Got
then weekly chart, I think the most significant thing is the 50-day moving average after a mega run. Monthly chart, the most significant thing is fear and greed in oversold territory.
Yep, I've been looking at the fear and greed. And when you find it, let's say like right now I've been trading this shitcoin river. I posted it twice. Like I've been really scalping it good. It's kind of been falling in my lap. Good. And like there's nothing to see because it's a brand new coin. But like for instance, like ZEC, like I just posted recently in the chat, and I don't know if somebody responded back. And I know you don't like to trade these coins, but if you can just pull up ZEC just to see if I'm looking at it the correct way. Like right there, is that like a sucker punch from basically a Armageddon move to like a revival and then a survival, and then that's that end right there, what we're seeing right now, channel. Is that like a sucker punch, or am I looking at
I
wrong?
would say that's potentially a sucker punch. Like we put this as a short back here on the
Yep, I remember that.
and then it turned into kind of a, you could say survival-ish or even mini revival here, which then pumped right into that zone of which I did not want to short this because I wasn't sure what was going to happen after a compressed breakout. And then the only reason, not necessarily the only reason, but a big reason why that turned into a massive dump was because the news came out like the whole dev team quit or
Yep,
I don't
yeah, I
know
remember that.
news.
Yep,
But yeah, that then created a lot of panic and fear. It also then broke down this low here, which then shifted that into bearish market structure. So that would then be like, okay, we can potentially trade short into supply, aka the sucker punch. So this could definitely be looked at as
got it.
a sucker punch right here for the next liquidation low.
Correct.
into potentially even all the way down here and somewhere in this zone. So that, yeah, I would say that's correct.
Got it. Got it. Okay. So I'm looking. Thank God. It took me only like a couple of months. Got
Yeah.
it. Got it. Thanks.
Yeah. Cool. Any last questions here, guys? We're coming up on the hour. Nope. All right, cool. Appreciate you guys joining. Appreciate you guys sharing what's going on in your trading journey side. Trading isn't easy, but just don't give up and don't risk too much. Risking too much is what's going to lead to your demise ultimately. The more conservative you are, the more money you're going to make in the long run. We all want to make big money. We all want to fucking swing for the fence when it looks right. Yeah, you can have dynamic risk if the setups are like really, really there. Like if we're in full-blown bull market, revivals are there, everything's in alignment, I'm gonna risk a little more. But it's when you risk everything and don't prepare for situations like the potential apex incoming that you just wipe yourself out and you waste years of your life because you wanted to change your life and you change it in a very negative way. So anyways, guys, that's a wrap for today. Thanks for tuning in and I appreciate you guys and I'll see you guys in the next one.
Thanks, guys. Take care.
You guys.